Insight into auditing. Errors. What are errors? Errors can be defined as a mistake or misstatement made due to ignorance or lack of knowledge, without any malafide intention. Causes of errors are ignorance, or carelessness, or lack of knowledge regarding accounting principles. Underlying intention or motive of the act is the only differentiating factor between errors and frauds. There is a thin demarcation between errors and frauds. Errors and frauds, both are mistakes or misstatements, but only the factor that differentiates between errors and frauds is the underlying intention behind the act. If mistakes or misstatements are incurred without any intention of a person, then they are called errors. Whereas, if mistakes or misstatements are incurred with an intention or motive to deceive or cheat, then they are called frauds. There are 5 types of errors. Those are: 1. Errors of omission. 2. Errors of commission. 3. Errors of duplication. 4. Compensating errors. And 5. Errors of principle. Errors of type 1 to 4 are also called clerical errors, because these errors are related to clerical processes. Errors of omission. Errors of omission are caused when a whole or partial transaction is omitted to record or posting into ledger. In the case of full omission, errors are difficult to detect, because full omission of record from the books of accounts does not affect the trial balance, which is prepared to check the accuracy of financial records. Impact of error. In the case of full omission, agreement of trial balance will not be affected. In the case of partial omission, agreement of trial balance will be affected. Simple example of errors of omission is: water expenditure of NPR 50,000 is omitted to record. This is an example of full omission error. Errors of commission. Errors caused due to incorrect recording or posting of transaction, either wholly or partially, in the books of accounts, are known as errors of commission. Wrong calculation, wrong posting, wrong addition, wrong casting and wrong carry forward of transactions are the causes of errors of commission. Impact of error. Most of the commission errors are clerical in nature and affect the agreement of trial balance. Example of errors of commission is: electricity expenditure of NPR 50,000 is wrongly entered as NPR 5,000. Errors of duplication. Errors caused due to multiple recording or posting of transaction in the books of accounts are known as errors of duplication. It occurred due to wrongly recording or posting of transaction twice or more times. Impact of error. This type of error does not affect the agreement of trial balance. Example of errors of duplication is: water expenditure of NPR 50,000 is booked twice or more times. Compensating errors. Two or more errors that counterbalance the incorrect impact of each other are referred as compensating errors. In this type of error, effects of errors are reciprocally nullified by one or more errors. This type of error is also known as offsetting error. Impact of error. This type of error does not affect the agreement of trial balance. Example of compensating errors is data collection from customer A of NPR 20 is shown as cash sale, and another cash sale of NPR 20 is shown as data collection from customer B. These two errors compensate the amount collection from debtor and cash sale reciprocally. Errors of principle. Errors caused when fundamental principles of accounting are not followed while recording transaction are known as errors of principle. In these errors, accounting principles are violated in the process of accounting. It has occurred due to lack of knowledge and understanding of accounting principles. Impact of error. This type of error does not affect the agreement of trial balance. Example of errors of principle is revenue expenditure of NPR 100 is booked as capital expenditure, or vice versa. Impacts of errors. 1. Errors of omission. Full omission errors do not affect the agreement of trial balance, whereas partial omission errors affect the agreement of trial balance. 2. Errors of commission. Most of the commission errors affect the agreement of trial balance. 3. Errors of duplication. Errors of duplication do not affect the agreement of trial balance. 4. Compensating errors. Compensating errors do not affect the agreement of trial balance. 5. Errors of principle. Errors of principle do not affect the agreement of trial balance. In a nutshell, we can say that unintentional mistakes, without any malified intention, are known as errors. Underlying intention of mistake or misstatement is the differentiating factor between errors and frauds. Errors are caused by lack of knowledge or ignorance. There are 5 types of errors.
Thank you for watching. For more videos, hit subscribe button below.